Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So in today's video I'm going to share with you guys 5 companies that are currently undervalued. I recently put together 26 companies that are undervalued based on Morningstar, based on Wall Street, and I've shared that with the community on the Patreon account. If you haven't joined us there, do that if you can, inshallah. I do share all the buys and sells that I make regularly, the family portfolio, as well as of course trying to post as much as I can whenever I can, inshallah. So if you can join us, that will genuinely help the channel. So what I'm going to do now is, as you know, the markets has been up and down for basically for the last whatever weeks. And when you look at the S&P 500, for example, a year to date is actually down about 4%, which is not bad considering where we were about 2 weeks ago, where the stocks were down about, the S&P 500 I think was down about over 7%. Now we've got some of the gains back. But the issue is now what happens moving forward. Now there's a lot of talk and everybody will say their piece on whatever they need to say, right? Everyone has got opinion about whether we're going to end up in a recession, whether the S&P 500 is going to crash by the time we get to after the 90 days of the tariff situation. Everybody's got some opinion about what's going to happen. But if you think about this, okay, in the long run, and this is what I've been trying to tell people and literally tell myself on a daily basis, is the stock market, if you're in it for next week or 2 weeks and then you're going to sell everything, then you are in the wrong place. Then you, of course, this is not the right place for you. But if you're here for the next 5+ years, then you've got absolutely nothing to worry about. And I'll explain to you what I mean by that, okay? Right now, the S&P 500 is basically down about 4%. By the end of the year, it could be down about 10%, or it could be up by 20%. It can happen. But check this out. If you bought, and I'm not saying go and buy the S&P 500 as it is, the SPY is the ETF that tracks the S&P 500. If you bought this ETF, okay, in 2005, so 12 of basically you bought December 2005, and you held it up until now, you would have made 448,000, basically 48%. So that's total annualized rate of return. So total annualized rate of return will be about 9% per annum. Okay. So what I'm trying to say here is, if you hold stocks for the last 20 years, right now you would have made every single year about 9%. So this is why they say, the S&P 500 returns, between 7 to 10% over a period of time, which is like 5 years, 10 years, 20 years, 15 years, whatever it is, okay? And that's the important part. And this is the bit that I genuinely, I want people to understand. If you're young, say for example, you're in your 30s, you're in your 20s, and you're buying stocks now, so you can build a nice portfolio, retirement portfolio, by the time you get to your 65, 67, whatever retirement age is, okay? And you want to live off that, then of course you have absolutely nothing to worry about. Buy high quality businesses and leave them alone, because this is the proof. This is the proof. We're not saying that basically we're gonna do exactly what has happened over the last 20 years. However, generally this is what happens. Even if you look at it between 1960s to all the way now, or all the way to the basically 2005 or whatever, is more or less the same. So the moral of this story is, buy high quality businesses, hold them for a very long time, and buy them when they are discounted, when they're undervalued. Do not buy them right now because so and so said you should go and buy and these high flyer companies, because you could lose a lot of money, and we've talked about that in the last few videos. So my plan for today is to share with you guys 5 companies that I've actually, this came from a list that I've shared with the community on the Patreon account. So on the Patreon account. So if you are interested, sign up for the Patreon account. The link is on the description. Try it out at least for once. Okay, right. So the first company we're going to talk about today is Adobe. Adobe is a great company. It's a 300, over 100, closer to 150 billion market cap. It's probably one of the best technology companies out there that is so much undervalued at the moment, because there's a lot of uncertainty with regards to AI and whether AI is going to basically take the company's business and so on. And that's not going to happen anytime soon. I'm telling you right now. We do use their product on daily basis, and some of the subscriptions, it just gets renewed. No one actually checks it. Okay, it's going to be a while. Some retail not retail investors, but some people who use video basically editing software from this company might slightly move away from them. But majority of the people, I'm talking about companies, will not be making that switch anytime soon. And I don't think the company is basically going to go to zero anytime soon. Okay, so for that reason, I've included here. It looks like it's about over 50% undervalued at the moment. $590 per share is what Morningstar has said. So about 54% undervalued at the moment. Great company with regards to return on equity, return on invested capital, and it has a wide moat still. So one of the best out there. And if we look at it, for example, a year to date, the stock is down. Okay, just about 14%, whereas the S&P 500 is about 4% down. Now, as Wall Street is also saying it's a buy, so you can see here we've got 18 strong buys, 8 buys, 13 holds, and overall it's about 27% upside from where we are. So basically they're saying closer to $490 per share is where they think the price should be. Next one that we're going to talk about today is Novo Nordisk. This is a company that I have been heavily buying, and I'm going to continue buying. I've been buying one share of this company every single week. Yep, basically moving forward, I'm buying one single share of this company every single week. I did it this week. I'm going to continue. I think I will own about 81 shares or so far. I'm going to try to get to 100 before it bounces back. It's about 35% undervalued at the moment. It has a amazing dividend. It has a wide moat, amazing product so far. Of course, there's competition with Eli Lilly and so on. They might be taking some market share from this company, but it's still, this company is going to be absolutely fine. I can guarantee you that much. Of course, anything can happen. Only Allah knows what's going to happen tomorrow. But based on my research, based on what I find, I'm comfortable to buy 100 shares of this company and leave it alone. See what happens, inshallah. The profit margin is absolutely amazing. Return on equity even better, and return on invested capital of 56%. Now, this tells me this company is very healthy, very profitable, and the management are doing a great job. The fact that it has a free cash flow of $10 billion, nothing to worry about. I really would like this company to start buying their own shares right now, using some of that free cash flow in the long run, and potentially increase that dividend as well, because that's how they return share basically to shares value to shareholders, if you like. So EPS is expected to grow about 32%, which is absolutely amazing. Revenue is expected to grow about 31%. And right now, like I said, it's about 35% up, basically upside from where we are. So both companies are doing absolutely amazing, but right now they seem very much discounted. And as you can see, Novo is down about 24% right now, and Wall Street is actually saying it's 4 strong buys, 2 buys, 4 holds, 1 sell, and 1 strong sell. And overall, it's about 38% upside from where we are. $90 per share is where they think the price should be. It's closer to this one, basically. Now, the next one we're looking at is TSM. This I'm really disappointed with. I don't know what's happening with the UK, but I've been forced to sell my shares of this company on my Interactive Brokers. I've had it before. I don't think they knew what they were doing, because their ISA account is quite new. So that's the family ISA account, and not under my name. So that one has now I've been forced to basically sell it. So we've sold that now, and there. As you can see here, it's about 48% up, basically undervalued at the moment. Look at the amazing EPS growth and revenue expected. Really, really good. Best when it comes to profit margin, return on equity, return on invested capital. So yeah, I might buy this on the invest account rather than on the ISA, because you can't buy on the ISA anyway. And I wouldn't mind actually if I bought this now, just paying a little bit tax. And I don't know. I'm really, really considering, because I can't remember how many shares I had, but I've been forced to sell it. In fact, it's sold. Because I didn't check that portfolio for quite some time. I got the email, I got the notification, and then they sold everything, and then I had to use that money for another company. And this one, as you can see, a year basically is about 11% down. And look at it, Wall Street saying it's a strong buy. Silicon Alpha Quant is basically saying it's a strong buy as well. If you click Wall Street, you can see 12 strong buys, 4 buys, 1 hold, no sales whatsoever, 26% upside from where we are, $223 per share. I'm really considering buying this one on the basically invest accounts, but I'll let you guys know, inshallah. Next one is ASML. Okay, without these two companies, I think technology will not exist. I genuinely don't think. This company makes the machines that basically are used by this company, and this one basically you create or design, basically makes all the chips that basically Nvidia's and all the rest of the chip makers or designers actually make, basically design. So without these two companies, I don't think we will actually, technology will move forward. The world is not going to be the same, I promise you. And they both have a very much, especially this one, monopolize the market, if you like. 36% upside from where we are right now. As you can see, over $10 billion of basically free cash flow. Dividends is really being good. Profit margin, return on equity has been good. The return on invested capital of 38%. I really like this business. There's not that many companies that are as good as this one out there. So let's look at what Wall Street is saying. Wall Street is right now 22 strong buys, 8 buys, 9 holds, and 1 strong sell. And as you can see, about 28% upside from where we are, just over $900 per share. And if you look at the price, for example, year to date is actually up about 1%, which is really interesting, right? And final company we're going to talk about today is Fortinet. This is another company that I own in the family portfolio. It has a wide moat. As you can see, they don't pay any dividends, but when it comes to profitability, return on equity, return on invested capital is really good. $1.8 billion of free cash flow. They expected the earnings just to grow about 4%, revenue about 14%. Now that can potentially change. I'm not sure what's happened. I haven't looked at this yet, but basically the company reported earnings recently, basically just a couple of days ago. And at the time it was down about 10%. So I'm going to go through this anyway. Maybe I might just do a whole video on this one, but I'm just going to quickly check the earnings expectations, see if anything changed. So about 5%, 13% in terms of revenue, 16% in terms of still 2027 now revenue side, but more or less the same basically what I've given you here. So will be interesting to see, inshallah, moving forward what basically these analysts they say. But about 11% up, basically upside from where we are. Like I said, if you would like to grab a copy of the 26 companies that are undervalued at the moment that I put together using Morningstar valuation as well as Seeking Alpha, go to the Patreon account. About £2 or to less than £2, you can get access to that, inshallah, and it definitely helps the channel. So what I'm going to do now is, inshallah, show you from Sharia compliance side of things. As you can see, none of these companies have any issues with Sharia compliance side of things. But yeah, that is really what I wanted to share with you guys. There's a lot of noise and things going on in the world, in the market, stock market, and so on. I'm going to continue buying basically high quality businesses. I'm going to hold them for a very long time. So yeah, I'm now going to share with you guys the 2 companies that I own in this portfolio that we talked about today. 81 shares for Novo, for example. And as you can see here, I'm down about just 6%, which is not bad at all. My average is $69. ASML is my biggest holding in terms of money side of things, so about £9,000 right now. I'm up about 1.6%. This has been very volatile stock because it's been going up and down. I've got 17 shares. Potentially I might add another 3 shares while it's still basically undervalued, just to round it up to 20 and leave it alone for quite some time. My average is $654 per share. So we'll see what happens with this company, inshallah, moving forward. But yeah, that's the video that I want to share with you guys. I hope you enjoyed the content. It takes a lot of time and effort to put these videos together. Press that like button, share it with your family and friends. Let me know if you have any questions, inshallah. Have a wonderful day. Assalamu Alaikum.